Hello everyone, just real quick I want to share a concept on using range bars or volume bars rather than time charts. And I'm going to look here at the mini S&P and see if we get any signals. So again, I do not like to use, if I'm short-term trading, I don't like to use minute charts or 5 minutes or 6 minutes or whatever it is, simply because you have to wait for 5 minutes before something happens. On the other hand, if you're using volume bars, which we are right now, we're using the mini S&P 10,000 volume bar. So that means that every time 10,000 contracts traded, as you can see, a new bar will complete. So that's why you see all the volume bars are the same, 10,000 volume bars. Another way to go about it is with the tick charts. And the tick charts, or excuse me, range bars using ticks will complete when the market completes a certain distance and price from high to low. So in this case I did a 12 point ticks. That's exactly 3 points. So you'll see that the high and low is going to be 3 points apart, and that uses the price. So one uses price, the other one uses volume. I can't say that I like one better than the other, but if I had to choose, I would probably look at the range bar a little bit more. And what I do when I get a signal, the way I like to approach those markets, is from the assumption that most days are not a straight up or straight down days. So I look for turning points and reversals in the markets, to go up, to go down, to change direction. Obviously, I'd like to know if there's a certain trend, is there a certain more bias to the market. And I think right now, if you look at the mini S&P and stock indexes in general, even though the markets, in my opinion, are overbought, if you look at the technical picture, you'll see that it's probably better to attack these markets from the long side, and I will show you why. So give me a second. So I'm looking at 120 minute chart on the mini S&P, and you can see it right here. And that's for me somewhat of a longer term indication when it comes to day trading. And you'll see two things that I'm noticing. First, the whole time we've been above this red line, which is a very special custom-made moving average that I came up with. And for me, when I'm trading above this level, that usually means I should attack the market from the long side. Also, I color-coded the bars. So if it's green, attack from the long side. If it's black, you can attack it from both sides. If it's red, you want to attack it from the short side. As you can see, it's been a long time, almost since May 22nd, since this chart said go attack from the short side. It was wrong. It was just for one bar. So if I go back, you'll see that, okay, there's times where we go in short, we're below the red line, and we will see the color coding. So that's as a side note. So now that I'm sharing what I shared with you, I know I want to attack from the long side, possibly, if possible. I'm looking here, I got a little diamond, a green diamond, and that means for me that there's a possible reversal. Now the market has been quiet, and tomorrow we have a FOMC announcement. So not sure that much is going to happen, but based on the technique that I'm using, I'm going to look at the previous bar high, which was 32.1175, and I'm going to go ahead and say, okay, if I get in, I want to go long if we break that level. So I'm going to put a buy stop right here, and let's go ahead and do it with a 2-lot, because there's a couple of things that I want to do in case we do get filled. So I'll put a buy stop at 32.1250. Okay, and I'm gonna let the stop work in there, and I'm gonna let momentum carry me in. And while we wait, I'm gonna pause. Okay, so as we are working here, we got another signal, another diamond, and this time the previous bar high is 32.1125. So I'm gonna, based on that, move my buy stop about 0.5 point lower. Okay, and by the way, I'm using our free E-Futures trading platform, which is a really nice free trading platform, which is great both for day trading, swing trading. We have time released orders. We have option chains. We have a margin calculator. I mean, this platform is really the complete package at no monthly cost other than whatever data feed you subscribe to. So this is as a side note. Okay, as we're waiting, you can see that we got filled. We have a momentum. So the buy stop worked, meaning instead of me trying to predict the bottom or predict that this is going to go up, I put a buy stop to enter the long trade, which happened. And I'll take down the crude chart and we'll just stick with the mini S&P chart. And usually what I do when I trade this concept, and I should have already programmed it in before, is I like to take about 2 points on the first one. And by doing so, I'm going to take away some stress. Allows me to go ahead and manage the trade a little bit better. And what I'll do is I'm going to put a limit. Should have had it already because it would have got filled. I will let it work. So now we got filled. Okay. So I'm long one. I took profit on one for about $100, I believe. Yes, 2 points. And now I'm going to look at the chart and I'm going to manage the chart and see how I like it. What do I think can happen? Can we break a new high? Can we go all the way up here? Where is this market going? And part of the studies that I use is called the parabolics. Those are those little green dots, in this case red. Okay, I use them as a trailing stop as needed. In this case, there's no reason I should have a stop below the recent low, which was 3206.50. So, not sure what's going to happen. But at this point, let me see if I have any stops. No, I actually don't have stops, so I'm slacking here on my trade management because I did not have the strategy created in advance, which is okay. I will put manual stops in here, and my stop should be definitely. I should not let it go below this price right here. So currently I have a stop. We are back to where I pretty much got in. I'm going to let this market play out a little bit. Within a bar or two, I'm going to start moving the stops up, as I feel that if the market's going to go up on what I consider turning points, there should be some momentum to it. Meaning when we go up on the first move, like right here, there's usually, it will move pretty quick. Okay, even here, 1-2 bars and it moves. But you gotta give some time for the market to actually play out. It's not going to happen instantly. That's always been the really tough setup for me. Do I put the stop at break even right now and get out? Do I take profit on both of them? And I think a lot of traders struggle with that question. So while I let the market play out a little bit and see what happens. So we have a few bars that went by. We made a high of 32.15, and we're dropping from there. And the big question is, I got it at 32.1175. Where do I put this stop? The very conservative stop will be 32.10 because that is the recent low. A stop that will give me a little bit better chances is 32.08, and that's what I'm going to do. I'm going to move my stop to 32.08, give myself a little bit better chances to make this trade. And at this point, I need to figure out a limit order for profit. I'm going to go for 32.17.5 based on the recent high. So actually, what I'm going to do is I'm going to cancel my stop. And I'm going to go ahead and send an OCO. So I click on the OCO. I'm going to put 1750 as a one limit. I'm going to do 32.08 as the stop. Now I have a working order, which is OCO, meaning the orders are related. Stop at 08, limit at 17.5. Whichever one gets filled, the other one will cancel. And that will be it for now, and we'll put another update shortly. Okay, so we're here, and the market is going our way. a few bars have passed. We got into the trade right around 11:45 Pacific time, give or take. Right now it's 12:12 Pacific time, so about half an hour. I'm getting closer to my target, and at this point I want to tighten up because I am getting close. I'm going to tighten up. I'm looking at what the recent low is. I'm looking at my chart, and the third bar before low was at 10.50. So I'm going to put my stop at 10.25. So I'm simply going to go into my work and stop, click and drag it to 10.25 and release it. So as you can see, I have two orders, a limit 17.50, a stop at 10.25. Market needs obviously to break above 16.5, so we got pretty close. I believe it has a chance, but who knows? We'll let it do some work here and see what happened with this trade. Again, this is a 10,000 volume bar chart on the mini S&P. I'm using the E-futures demo, which you can get right here on our website. You can click on E-futures. You can also click right here, open a demo account. We do offer multiple platforms. My favorites are E-futures, Transact, CQG, FireTip, just to name a few, Multichart, Sierra. Those are some of the platforms that I really like. So we're still waiting. We want to see a little bit of a spike, a little bit of a volume buy. Give us this little limit. Again, just to be upfront, trading in demo is always much easier than trading a live account. There's no real money on the line. Although in this case, I'm doing a video, so is that the ego on the line. But the concept is turning points, price confirmation, so you enter on a stop, and then account management as far as taking profits, trailing stop. If possible, to use multiples of 2 when you trade if you have the risk capitals. If not, you may want to look at the micros, because I think once you take the profit, if you have profit on the first part of the trade, it allows you to manage the second part of the trade much more relaxed and go from there. Like for right now, for sure, I'm about a 2 point away from my profit target. This should not be a loser, so I'm going to put my stop right here, give myself one tick profit, and then see if I can get this 17.5 target. And just for me to take a look at something, I'm going to look at my other chart right here. It looks like this was the pivot, is the 1375. This is my CQG, another chart that I like to use. And I believe that we should get the 17.5 based on what I'm seeing here, so I'll just let it work. Let it work and see if we can get it. Okay, and we got it. So we completed this trade using the counter trade signal based on the diamond, looking for price confirmation above, which we got, and then we managed the trade. Just so you know, this, even though it's called day trading, it still took over 30 minutes. So this was the completed orders, as you can see. We bought two at 32.1175. We got out of one at 13.75, made 2 points. We got out of one at 17.5, so almost 6 points. And let's take a look. So it was 387.50 of demo money. By the way, if this market goes above the 8 and the 19, it can probably have a little bit more legs, and that's always the the tough one. How much do you let the runner run? How much do you take profit, etc. So I hope you enjoyed this little video and got a couple of tips out of it. If you wanna sign up and get access to the same algo that I'm showing in this video, you can reply back to the daily blog email, or you can simply log into our website, go into the Futures Trading Education, click on Trading Signals, which probably we need to change the name, and you'll see some explanations, like right here. You'll see some some explanations of how the charts look like. You can sign up for the trading signals right there. So right here, you just sign up, get 3 weeks, fill out your information, and you're good to go. So thank you, and have a great rest of the week.